Well, hello everyone. K Kim here from the Traders Club, TwoTradersClub.com. Um, well, today we're gonna be looking at the for our midweek update that we do on a weekly basis. Here, we're gonna be looking at S&P 500, Dow Jones, Nasdaq, Russell, and the financial sector right about here. So I'll try to forecast what the market, I'm trying to forecast the short term, next few days, and possibly going to next week. Market is not closed. It's about 10 minutes before market close, so you see the flashing light going on around here. It just means that market is not closed. Market is still open. We still have 10 minutes left, so that's gonna continue to flash like that. And if we have some time, I'll look at Tesla, Apple, Facebook, and Google. So let's get to it here. Now, obviously, when we're looking at S&P 500, we've been talking about this. What we've been looking at, last few videos we did on these midweek update is that the pivot levels, right? What is a pivot level? Pivot level is when the old resistance becomes new support. That's the pivot, because it's not just resistance. Excuse me. It's not just support. It's a pivot when resistance becomes a new support, and it happens a lot. In the market, as you can see right here, this is what we call a pivot level, because old resistance becoming new support. And we talked about last I don't know how many videos. I mean, almost every single videos we look at on the spider here, we look at this. As long as we're above that level, benefit out continues to go to the buyers. And also we looked at excuse me, the 50 MA. 50 MA being that strong support level that we're gonna need to watch. If 10, 20 MA, if the spider loses 10 and 20 EMA on the daily chart, then obviously, we said, hey, look at the daily at 50 MA. As long as, that 50 MA is there, benefit out continues to go to the buyers for the intermediate term. I mean, when we lose 10 and 20 MA to the downside, well, in the minor term, benefit doubt actually goes to bears in the minor term. Minor term being short, very, very short term. But, we know that 50 MA, did act as, it has been served as a strong support level in the past, as you can see, as I'm circling here, that it has been acted as strong support level when we get a pullback. When we lose 10 and 20 MA, right? And here when we lost at 50 MA, we came down and we found support at the 100 SMA, just like it did here and here. So that's why we kind of watch these levels. And, that level does not mean it's guaranteed support or guarantee a bounce, but it's a definite level to watch. And so, we got back up during the day. We had that pullback, intraday decline. And then we found support again right on that 50 and 10 EMA crossing right over here, and then we got up. We initially lost 10 and 20 EMA, I think somewhere about here. I think we lost 10 EMA, I think 20 EMA kind of came down here, and then bounced. We lost both 10 and 20. 20 EMA is not on this chart right now, just the 10 EMA. And then, next, last time we looked at was last video. We said, hey, if we lose that level, watch 50 EMA, because that level is a potential level of support. And today, you can see that we did have a 1 day of a bounce right on that 50 MA. And again, we don't know. At this point, it does look like bulls are gaining some kind of momentum here. I mean, potentially absorbing this minor term sell-off with this kind of candle. That is obviously is a bullish engulfing candle. Yesterday we had inverted hammer. Inverted hammer obviously needs a follow through. We got that today. So we had an inverted hammer plus bullish engulfing pattern. It does look like we potentially finding support at that 50 MA, just like it did here, 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 and here. However, we need to see if we can able to reclaim 10 MA. 10 MA is right about here, right? This is a 10 MA. You can see that how 10 MA coming here, and 10 MA is currently acting as, very minor term resistance there. You can see that we just hit that level. We're just kind of dangling around that level. And it looks like, we have about 60 minutes left in the market. It looks like we're going to close something like this. And so what we have to watch for the minor term next few days is that are we going to have a follow through, right? Follow through is very, very important, and especially when you bounce at the 50 MA or 100 SMA. You know, when you bounce, you want to see it reclaim 10 EMA, and we're very close to 10 EMA, yes, but we haven't completely. The bulls have not completely reclaimed that 10 EMA as of today. So let's say when we bounce here at that 50 EMA, you can see that we reclaimed that 10 EMA. Though we pull back, but then bulls are really absorbing that selling pressure with these bounces here, and then was able to bring it right back up. So we can see that we found support at 50 MA. The question is, can we able to reclaim that 10 MA? If that's the case, potentially we can get back up to you know, somewhere back over here. The question, the problem with this pattern, the price pattern we have, is that, you know, intermediate term is that we have higher high and then we have a kind of a lower low, right? So instead of, you can see that in a line chart much better here, higher high and lower low. Instead of having higher lows and higher highs, we have formed lower low. And that, you know, what that's gonna do is that's gonna make things a little bit complicated for the buyers, where you know, if we did not, you know, establish or put in this lower low, and let's say we put in like equal lows or something like that, right? And then if we just kind of bounce, I think that we could have just continued higher like this. And because of the fact that we did put in lower low, again, it's a little bit too early to say. That could be a bit of problem. I mean, I don't know if it's going to be a problem, but we may be forming some kind of a megaphone pattern here, which means it might do something like that, and then it could turn it into a diamond pattern. Diamond pattern, a lot of times, especially if it forms at the top of the bullish move, you know, prolonged bullish move like this, possibly could become that topping signal. And then if this thing actually breaks, and again, as of today, we don't have any of this data, so we'll get to it when we have it. And obviously, I'm going to be doing these midweek update, so stay tuned. You see if that megaphone pattern occurs, and then the megaphone pattern starts to create a diamond pattern. And diamond pattern, again, when it forms after prolonged bullish uptrend like this, it could turn into a reversal pattern. So I'm just giving you a potential scenario next few months. Is it, let's say if we form that and we stuck here for a little bit, 202 and like 196 or so, 197, 8-ish in this area for last few months and consolidating, and then if you lose it and we come back down here, put in equal lows and then go back up and then do something like that, that will be some huge, massive topping pattern. And that is a potential scenario that may never occur. So, you know, I'm just letting you know that this could happen, but it's, you know what I'm saying, we don't have enough data as of today to conclude that. So at least you have some kind of idea, right, by giving you this, and you know, and if this thing could just maybe do this and then could completely, you know, nullify that potential, you know, the diamond pattern or the megaphone pattern, right? So we don't know. It's hard to say as of today what it's gonna do. So, but that's a potential pattern that could occur. So when you start to see that happening, then you know that, you know, that's potentially what's happening here. However, you know, to forecast short term, I would have to say that, you know, because we're still below 10 EMA here, in the minor term, it's a bit of neutral. The reason I say that is because, well, we did bounce off of 50 EMA, so that's good for the buyers. But we really, you know what I mean? We really didn't. As of today, with the tangible data that is at hand, right? This is a tangible data. We really haven't seen a follow through. Let's say if we continue like this right here, let's say we see that tomorrow, then I would have to say the benefit Dow continues to go to the buyers in the minor term, intermediate term, and primary term. But we have to be a little bit cautious about this potential megaphone pattern. Again, it's a potential. The keyword is potential. We don't have it yet because this could just go straight up and then maybe do something like that. We don't know that. But as of today, Minor term, bit of neutral, bullish to neutral, and then obviously intermediate term benefit Dow continues to go to the buyers. Why? Because we have put in higher highs here, and we are continuing to put in higher lows, right? So we're still in the vicinity and the territory of potential higher low there. Again, I say potential because we don't know that this is going to be a higher low as of today yet. It is a good signal. It's a good evidence as of today, but let's see if we can have a follow through there. Obviously, primary term, we can all agree with that we're in a primary uptrend, right? Just because it's extended does not mean it has to roll over. Price action is the king, and price action does not, it's not suggesting anything as of today that this market, you might gonna have any kind of have a correction as of today. And when it does, it's not too late because we'll know about it. When we get the topping, just like I told you about the potential, the diamond pattern, potential eco lows that, possibly going into lower high. I mean, there's a lot. This market isn't something that I've been continue to admonishing to you guys is that this market isn't going to go straight up and then just do this. That's not going to happen, right? I mean, anything is possible in this life of trading, in this life of stock market, because this is life, right? Anything can happen to you tomorrow and tonight, but probability wise, you and I will be surviving tonight and tomorrow. So probability wise, this market, I believe that it's gonna take much more for it to start to see some kind of a major topping pattern. So let's forget about that for now. When we get there, we'll deal with it. So market just closed, so we don't have any flashing there on my chart. So anyway, so yes, I have to say, if we can able to reclaim 10 EMA and close above that, tomorrow's Thursday, right? Then I do believe that Friday and then Monday we can have maybe a few days of bullish run. But problem is gonna be because of we put in lower low instead of higher low or eco lows, because we put in lower low in the minor to intermediate term, that this bit of a cautionary there, that we potentially making or establish some kind of a megaphone pattern there. So something to watch out. Obviously, intermediate term benefit Dow continues to go to the buyers as long as we're above 50 MA. Same thing right here. As long as we're above 50 MA, benefit Dow continues to go to the buyers. As long as we're above 50 MA, benefit Dow continues to go to the buyers in the intermediate term. So we are above that daily 50 MA here on my chart here. This is a pink dotted line. You see how well it has been respecting that level throughout. You can see here and here and here. I mean, that level does not always get respected, but it has a good probability of getting respected many times. You can see even with this little bit of correction there, 50 MA, 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 and today 50 MA. So it's definitely level to watch. And on our last video we talked about that if we lose 10 and 20 MA, definitely watch 50 MA. So it looks like we had a good bounce there, but let's see if we can have a follow through there tomorrow. Dow Jones, the thing about Dow Jones is that we put in new highs right here. This is a new high. Again, people call all kinds of shenanigans. People always want to call all kinds of stuff like bull trap, all of that. Right here, that was a bull trap. Right here, that was a bull trap. I mean, everything is a bull trap. That's what people always like to call, especially in these tweeting communities. And that's why I don't read through that. That's why I don't engage in that. I don't need time for that because there are just all kinds of crazy people. Just like in this life, there are crazy people I don't want to associate with. And in trading, I'm sorry to say, there are all kinds of crazy people just shouting out things all day long and just being very emotional. But obviously, hey, when we make higher high, that you can't just always call bull trap. The reason being is that higher high meaning they will continue to cultivate this uptrend. That's what it means. We may get a pullback, but it is pulling back to create higher low. And then that's how trend continues. Trend goes like this. Trend does not go like that. It goes like this. So if you know what I'm saying? So it's like what? Bull trap here, bull trap there, bull trap there. That's what it does. It goes up, it comes down, it goes back up and comes down. But when it comes down, it doesn't come down as much. That's the uptrend, right? Look at this. It goes up, goes up, comes down. And you got the idea, right? Maybe we get a pretty steep decline sometime, but still, we're still above this primary uptrend higher. These are primary uptrends. So we got to stick with it. As of today, we don't have any kind of topping formation. When I see it, I will let you know. So benefit Dow continues to go to the buyers on the primary term, intermediate term, and the minor term, because actually in Dow Jones we did reclaim that 10 EMA and we got pretty strong candle there. And in Dow Jones a little bit different than Spider, because Spider put in lower low, right? Remember we talked about potential that megaphone pattern? Well, Dow Jones actually did not put in lower. We actually put in equal lows. Is that important? Okay, it is important. It is a very, very important, because equal low gives more support to for the buyers. As far as the price action is concerned, as far as the sentiment is concerned, as far as the psychological sentiment or psychological level of investor or trader is concerned, is that there's a lot of, what it's saying is buyers are protecting that support level, right? They did not let the bears to put in lower low. So looking at this pattern here, primary term, obviously we got higher lows. Intermediate term, we are continue to cultivate these lows and highs. That means benefit Dow continues to go to the buyers. A minor term, intermediate term, and the primary term in the Dow Jones. We did close above that potential pivot level right here. You can see that we were able to close well above that. If we can able to hold right here, hold maybe a day or two, then potentially we can make new highs on the Dow Jones as well. Nasdaq here, Nasdaq is actually kind of forming, some kind of consolidation. We don't know. Again, looking at let me go to line chart here. You can see that we again did a little bit different to the Spider. We did not form any kind of lower low. We actually formed slightly higher low there with the equal lows intact. So we don't know how it's gonna bump again, what pattern it is forming. But we did get above 10 EMA. We did reclaim that 10 EMA, which means the benefit Dow continues to go to the buyers in the minor term. Intermediate term, we're above 50 EMA. So intermediate term, benefit Dow continues to go to the buyers. Obviously, in the primary term, benefit Dow continues to go to the buyers as well. Do we have any kind of topping pattern? No, we don't. We don't have any kind of topping pattern. We got nothing. All we have is higher lows and higher highs. You can see that right here. And so benefit Dow continues to go to the buyer. So can this be a top and maybe do something like that? Yes, it can. Anything can happen. However, we don't have that data. Where is the data? We don't have it. When we get there, we'll talk about it. But we don't have that. Let's not talk with the ghost data. Let's talk with the tangible data. Data is at hand. That's how do analysis, especially if you're using technical analysis to either trade and invest, and you're learning about technical analysis. If you don't use technical analysis correctly, it actually paralyzes you. What happens is you're just gonna start to not able to do anything, because you're just gonna be petrified with everything. You're just gonna be like, oh my god, this is gonna happen. Oh, because you're working with, not tangible data, but you're working with potential, outcome, or the fear, right? The scenarios that you create in your head. And in just human psychology, we do that. You do that, not in just trading, but in your life too. Don't you? Right? Let's say you got some rashes in your body, right? And you're like, oh my god, is it a cancer? Well, I say that because I recently got these rashes in my body in my whole life, right? My whole life, I never got those. Maybe a little bit, maybe like 10 years ago, not much. But this was kind of pretty severe, like all over my body. And it was itching. Usually rashes, they itch, right? So I'm like, is it a cancer? Like, you know what I mean? We fear for the worst. That's what we do. And then we go to the doctor, they're like, it's nothing, it happens, and it's going to go away on its own, and blah. And I'm just like, really? Yeah. It's like, obviously, I knew it wasn't a cancer, I mean, it could have been. I don't know. I'm not a doctor. I've never seen it. And so, but, that worst fear that happens. I mean, that's just, with that, even everything. If you have a job, like, oh, am I going to lose that job? Or if I have a car, oh, my car, is going to die out or something like that. If you have a girlfriend, she's hot, and oh, my gosh, she's going to cheat on me. Just always, expecting the worst. You know what I'm saying? And a lot of times, sometimes that could happen. But probability-wise, it's very rare that kind of, very rare that, that worst is going to actually, you know what I mean, is actually going to play out. So when you're using technical analysis, what happens is the emotion has to be removed, completely removed, your emotion. And a lot of times, you know what people do with the technical, it's like they get into a position, right? They go long, and then they start to gather everything to support their position. That's not how you do your technical analysis. Something I always say is this is scale, right? And then you put in your technical analysis, the bullish side, and then you on the other side you have to put in bearish side, and then you gotta put in both bullish analysis and bearish analysis and put them into scale, and then what you do is you go with the weightier matter. Which one has a weightier matter? Which one is more prominent, right? And then if it's more bullish, then you go with it. If it's more bearish, you go with it. But if it scales kind of like 50-50, then don't do anything. That's how you do. That's how you truly, profit or truly benefit from technical analysis. That there's always legitimate argument on both sides, bullish argument and bearish argument. We have to bring both to the table, and then we have to analyze. But a lot of times what people do is people argue, is that, well, this is bullish because this is that, well, this is bearish because that. They're both right. They're both freaking right, well, unless they're just freaking stupid and just coming out with some nonsense. But if there is a pretty legitimate argument and somebody coming out with a bullish argument, somebody coming out with a bearish argument, they're both right. The question is, which one do we put more weight on? You see that? So if somebody could come and, hey, Kay, isn't it extended? We got bearish divergence. We got that. It is right. It is right. But the price action is not condoning it. Price action is not confirming it or endorsing that. Because price action we put most weight on, so that what we do is we have to put most weight on the price action. Because of that, looking at this, obviously we got nothing. If this thing starts coming down here and do something like that, then maybe. And then we get, and we start to break below that level, we start to create lower highs and lower lows, then that might be that topping pattern. We formed that. The bears have formed that. That was a massive topping pattern right about here. But bulls completely demolished bear's dream and stole this one from him. And bear's spirit is crushed. And ever since then, they just couldn't do anything in the Nasdaq. This was it. This was their one chance. And I've been talking about this for months now, since last summer, early summer. But anyway, let's go to Russell. I already spent 21 minutes there. Russell's a little bit concerning. The reason being is that we potentially got left shoulder, double head, and a right shoulder, and that potentially is a topping pattern. Potentially is, because last time we formed something similar to that right here. Okay, so that potentially is topping pattern. The only difference is, though, with this is that, well, when last time 2010, when we start forming on the Russell, we start seeing spider and the Dow Jones and the Nasdaq start forming as well. Same thing here in the 2008 or 2007 crash and 2011, that steep decline there. We saw Nasdaq and the Dow Jones and the spider also forming this topping pattern, which means it is condoning each other. It is endorsing each other. Right now, Dow Jones, spider, Nasdaq is not endorsing Russell. It is not condoning Russell. So Russell is on its own. Russell is actually, because all the indices is ignoring what Russell's doing. So there are discrepancies. I mean, obviously, can Russell alone bring this whole market down without the help from other indices like a Nasdaq and spider? That's the big question. You know what I'm saying? So because if we had another index with this kind of topping pattern, I would have to say some cautionary signal. Let's say Nasdaq also had this, something like that. Something like this. Then yes, huge. There's some concern there, but because of Nasdaq, spider, Dow Jones still looking pretty much bullish, I would have to say, Russell does look concerning here, and this is the topping pattern. It's a cultivation of how long? Almost year, 11 months of cultivation right here, and so we start breaking from this level. That could be a pretty bad for the equities. Again, let's not hope, what I mean? Let's not create this worst scenario as of today, because other indices still, not confirming Russell, but there is a bit of a troubling signal in the Russell. However, it's not confirmed. What it means, this is a potential support level, and that's a very strong support level, which means this could turn it into some kind of channeling action. So we don't know that as of today it's going to topping. This is going to be a topping pattern once we break this level and go back up and retest it as new resistance and create this as a pivot level. And then in that process, when we create lower highs and lower lows, if we do that, then that's a cautionary signal, right? So as long as this does not confirm, I can't put too much weight on this, right? It is right. This could be a topping pattern, but again, what we talked about is the weighty thing. Which one do we want to put too much weight on? Well, we got the Russell. We got the Russell here, pretty bit bearish, but we got the Dow Jones and the Spider Nasdaq not really condoning this move. So we have to continue to watch and see how the other index is going to react to that, or is it going to kind of resolve itself? Are we going to turn it into a channeling action here, or are we actually going to start to break here? So we don't, as of today, it's not confirmed. This topping pattern is not confirmed. As long as we're above 107-ish, 106, 107-ish, I think we could, it's not completely confirmed as long as we're above that level. So that's definitely a concern. Because of where the Russell is, but I don't know. I would put a whole lot of weight as of today. If I start to see something happening on the Spider, and then other indices start to confirm some of these weakness in this index, then I would put a little bit more weight on that. Let's look at financial sector as well. Man, I already spent 26 minutes there. Financial sector, obviously, same thing. We're above this pivot, right? We talked about this. As long as we're above pivot, we don't know. What we don't know is how long it's going to grind. Last time we grind about a few months here. Right here, we grind about a month or so. So what we don't know is, how long it's going to grind above this pivot. So benefit out actually continues to go to the buyers in the financial sector in the intermediate and primary term. We did not able to, reclaim the 10 EMA. I think as long as we're below. This is, I think, 23.52 level to watch. If we can able to get above that, I think we can continue making new highs. But if we're not able to get above 23.56, we might able to do something like that. And that could be a mini head and shoulder, left shoulder, head, right shoulder, and then further down if we break the neckline. But if we do fall back, make sure to watch 50 MA, because 50 MA did act as pretty, significant support back in July 2014. And then we broke below that, got back up, and then, so that, last time we did the same thing. We got up, came down to 50, and we kind of hung out here for a little bit. We didn't actually, continue higher, but we hung out a little bit and then fell back. So, definitely 50 M to watch, but right now, benefit out continue goes to buyers, intermediate and primary term, because we're below 10 EMA. And this is kind of a potential, again, is a potential level of potential head and shoulder right here. We don't have a data as of today that's what is going to happen. So we would have to get above 23, well above 23.50-ish. So looking at all these indexes, and we just looked at it for about 25 minutes here. Benefit Dow continues to go to the buyers in the intermediate and the primary term. Something like Dow Jones and Nasdaq looks a bit more stronger than Spider and this financial sector and Russell. But as of today, we don't have enough data to conclude that is this market. Is this going to completely roll over? Let's just say if this is the market top, right? If this is the market top, this market isn't going to just do this. It's going to take, 6 months, sometimes 4 to 6, 8 months form topping pattern. But when that topping pattern starts to form, we'll know about it, and then we'll look at it and we'll talk about it. But as of today, let's deal with the tangible data at hand. Let's deal with today's price action, and we did find some pretty firm support 50 MA with the bullish inverted hammer and engulfing pattern today. Let's see if we can see some follow through tomorrow and close well above 10 EMA on the Spider. Then I do see that short term, next several days until maybe next Monday and Tuesday, we could continue to see some bullish grinding higher move. Definitely this right here, because we put in lower low and higher high here. And, on a Spider, we potentially forming some kind of a, like we talked about earlier, some kind of a megaphone pattern, potentially could turn it into diamond pattern, but we're way too early for that. So good bounce today, but it's, we'll see how it plays out next few days, and in the way it plays out next few days is going to determine how it's going to look next week. So we'll get a better idea next week, and we'll look at it again next Wednesday. I think next Wednesday I am doing the live. I apologize, guys. Last week I was going to do it. I was not able to do it. It was a few weeks ago. When is the next time? Hold on, let me look here. October 1st. Okay, so next Wednesday we're going to do a live midweek update. So hopefully I can make it. Sometimes I get these important business meetings since I do run a few business here and locally. So sometimes I can't always make it, but I have that day planned unless there's unless there's any kind of emergency or any important meetings I have to attend. I have planned to get the live meeting going on. So next Wednesday we'll look at it and see if this megaphone pattern is working out, or how it's playing out. So next Wednesday, feel free to sign up for that on my blog, twotradersclub.com. There's a link there on the video, or below the video, or above the video. And so let's see, 30 minutes gone by. Let's go through these quickly rather. Tesla, obviously, last Wednesday we talked about this kind of head and shoulder playing out. Because I think last Wednesday it was right about here, I think. And if we are not able to get above 10 EMA, this is a 10 EMA right here, benefit out continues to go to the bears in the minor term, and you can see we were not, the buyers were not able to reclaim that, and because it was not able to reclaim that, we found resistance here, and what it did was we formed this head and shoulders pattern. And then we're at the neckline. We broke that neckline. That's a confirmation of this head and shoulders, and then potentially forming a bear flag. You can see, the volume is declining, but for another low to about 100 SMA. For this being Tesla, though, this could just get right back up, ignoring this head and shoulders. But I think because we now have a kind of flatlining that 50 MA there, and we're below 50 MA, so benefit of doubt actually goes to bears in the minor term, and intermediate term, a little bit bearish to neutral. The reason I say that is because we still kind of have we're still kind of in the territory of potential higher lows. I know uptrend support was somewhere here that broke, but we're still, I guess that's more of a primary term. So primary term, I say, primary term, we have higher highs. Potentially higher low somewhere here. We're not sure yet. But intermediate term, we're close to 50 MA, so let's just give it a neutral status. Neutral, a little bit bearish though. Minor term, bearish. And so, I don't know. At this point, with this head and shoulder confirm, I would stay away for further confirmation of a further confirmation of a bounce. At least you wanna see 10 EM getting reclaimed before trying to go back, go long here. You can see 10 EMA reclaimed, 10 EMA reclaimed there, 10 EMA reclaimed. So, once it reclaims 10 EMA, bulls can able to get a little bit more confidence to bring this back up there. So, Apple, we've been talking about this, and we've been talking about the bearish divergence. If you haven't seen that, I wrote an article on that on my blog there. So we kind of potentially forming some kind of a symmetrical triangle formation, and we talked about last several videos that the Apple still does look bullish, but it's going to struggle, and that's what we've been talking about. That was a theme for Apple, is that it's probably going to continue to try to grind higher, but it is going to struggle, and that's what we're seeing here. You can see we're going higher, but it is not really seeing smooth move. It is struggling here, and in that process, we have formed this small triangle formation. Is this a bullish pattern? It can be. Obviously, at this point, it could break out to the upside there, or it could break on either side. I would have to say, because trend is still up, there's a little bit higher probability that we could potentially break to the upside. But if it breaks the downside, I would really watch out. And if this does break to the downside, and if we break this pivot level here, and if we lose that 50 MA right here, right, because 50 MA has been acting support here, and we start breaking below that level, that's gonna be a bit difficult for Apple, and that's gonna be very, very hectic for the buyers. And next level to watch is 100 SMA, which is some of these support level right here. We got another support, and then if we start doing something like this, let's say, I'm just giving you potential scenario and say, let's say this thing comes down and goes up and do something like that. What does it look like? Again, that's the left shoulder head, right shoulder there. We don't have that data as of today, right? So when we get there, we'll get there. But right now, we don't have that. It could happen, but we don't know that yet. Let's say if this thing does break to the upside, we're gonna get caught in that resistance level because that resistance right here has been rather strong. 1, 2, 3 there, so we could just continue to grind there. Again, with that, bearish divergence we looked at, I don't know, like a month ago or so. Again, I don't know if this got, if it has enough power or strength from the buyers to really bring it up to above, above this resistance level. I think if anything, the best scenario for the buyers, in my opinion, is they just keep grinding up here before we get another steep decline, and then could potentially get back up. So I think it's going to struggle there. Facebook, I want to talk about this, Facebook, and this is a level right here that needed to hold or just new support. This was an earnings gap, came down, we found support, came back down. Where did we bounce? Right on that 50. This is a reason why when we pull back, these are level to watch, because you can see how it continues to do that, right? If you really look at it, the market does seem chaotic, and erratic. If you look at short-term basis or a tick-by-tick basis, or if you just sit there and watch it all day long, it's gonna seem chaotic. But if you really kind of observe kind of a longer term, they kind of do move in a way, in an orderly fashion. You can see 50 MA here, 50 MA there, 50 MA there. How that 50 MA continues to act as support at least these 3 occasions, right? We came down, bounced, 10, 20 MA, 10 MA, and then we just keep riding the 10 MA, failed, 50 MA, and then we see that happening over and over again, Spider and these indices as well. I think 85 is doable. I think 84 is also doable. We've been long in this since right about here, 66-ish, and then closed most of our, some of our position there, and then we're just kind of waiting for 84-ish there. Last one, Google. I'm still holding my call positions there that I was involved around 568-ish here. And you can see we just haven't done much. We just kind of moving sideways. Looking at the intermediate term, I do have to say that we are above these moving averages. So benefit Dow continues to go to the buyers intermediate term and minor term for the fact that we did get above 10 EMA. You can see, 100 and 200 SMA. We kind of they met. They did not cross to the downside. To the downside. See that's a big deal, because if we start seeing 100 and 200, that would be a death cross. And when you see that last time we saw something like that, let's see. Actually, let's just make after steep uptrend. Okay, so good example of that is right here. You can see after steep uptrend move, we saw 100 and 200 and death cross, and you see what it did here last time. So after this kind of steep move right here, that was very critical that it stayed together to the upside instead of getting that death cross. We didn't get that, and that is good for the buyers. And now they're separating their long-term averages. They're 100 and 200 SMA. So definitely, even longer term for now looks bullish there. Good thing about it is we are continue to cultivate and create higher lows and higher highs in the intermediate term. So we have formed this kind of a tight rectangle rising channel pattern there. So we don't know how long it's going to continue. All we know is this thing can just continue like this forever. We don't know how long it's going to continue, but we are making higher lows. We haven't, primary term, we have not made higher high yet. This is high in a primary term. We haven't made that, but in an intermediate term, we did put in kind of an equal high. So if we can make another higher high and do something like that, then we can potentially get out. So what you want to see is this thing getting above about 60.06-ish, and then go to about 615, pulls back, retest this resistance and new support, and bounce and gets above this level, then we can get to about 640, which is our next target to unload most of our positions. But but it looks like it might just continue in that. And with the indices, market index with the uncertainty in the minor intermediate term, that I think is kind of behaving towards that. But I think as long as we don't see abrupt steep decline in the market, Google can still do very well at this point. But we're just kind of hanging out here, and I don't know. Is this a resistance? Maybe. We don't know that as of today. So you got something like that going on. We're just kind of range bound here. So, but we're above 10 and 50, and we're above all these moving averages. So benefit Dow continues to go to the buyers. What I really like to see is closing above this level and just getting above it. If we can get above that, I think we can able to get a 640 there, maybe a pullback, and then potentially continue as long as this market continues to illuminate and create a bullish environment. So 40 minutes, but I wanted to cover some of those things. So let me know if you have any questions, but hopefully these videos will help you just kind of get a better idea of where I think. And I don't presume to know everything where the market is going. I just know that using technical analysis, that we can able to identify probabilities of certain move. But things could happen. I mean, sometimes unthinkable does happen. Sometimes these smallest odds can play out. This is the market. But if you're a trader that you want to trade it, and this is your vocation and this is your passion, and you do this for the rest of your life, then you know what I mean. Then if you continue to develop the high probability setups and high probability analysis, how you can look at this market in a high probability way to able to forecast, and I think you will do well. And there will be seasons that you're not going to do well. There will be months and season where you're going to do terrible. There will be seasons that you're going to do very, very good, but that's a part of the game. And so it's not about somebody nailing one thing next day. Oh, he called that. It's not about that. It's not about it. It's not about me calling, top of Tesla or Congress. None of that. It doesn't matter. That kind of stuff don't matter. What it matters is if you can able to do this a month in, month out, year in, year out, and if you can have to continue to get better at it and continue to cultivate the skill to able to narrate and refinement, right? To make your analysis have higher probability and able to forecast in that way. And again, does not mean it's always going to play out in that direction, because anything goes. But if you trade long enough, I've been trading since 2007, so I can't say that I have 20 years experience. But, going in 10 years now, I have to say that, there's more chance that as far as the forecasting is concerned, with the probability analysis and using technical analysis, that there will be more time you'll be right than wrong. You know what I mean? And when you're right, you're longer to be wrong, right? And when you're wrong, we try to really shorten the length of being wrong, because we all gonna be wrong. This market is gonna humble everybody. And one thing I want to say is this market knows how to slaughter you. This market knows how to punish you. This market knows how to humble you. There are people out there thinking they know everything. They don't know anything about this market, because this market will eat them alive, right? There are people out there like, they're just so cocky and they just know everything, right? And they just want to argue with everything. They're probably like been on this market for maybe very short time. And a lot of times there's some people, they get lucky first year or so, and they get super cocky, like they're born to do. They're like a stock god or something, right? You know what's gonna happen to those people? And I'm not cursing or anything. Is that it's kind of like that. If you don't understand this market properly, and then you start making money, what happens is you get cocky, and then you lose all of it, and then more. Kind of like the psychology of that is, when you have you ever heard about people who win jackpot? And they go back and look at all those people who won jackpot. What do they say? They say 80% of those jackpot winners Either they're in a rehab, prison, killed themselves, died. You know what I mean? Why? Because they don't know how to deal with that new environment. So I would, what I'm trying to say is that it's same thing in the market. Is that people can get lucky first year or so, and then they don't know how to understand. They don't understand the market, and they don't understand how, you know what I mean, how brutal this world, this trading world can be. Then we're gonna get wiped out. They're gonna lose everything. And then, so you know what I mean. So I gotta understand that fact. It's no joke. This is not it's not a playground. This is not for kids, and this is not for somebody who doesn't have stomach. This is not for somebody who doesn't have balls. Not only you gotta have balls and maybe toughness and a mental capability to able to, go through certain things in trading, but you also have to understand how the market works, and you also have to understand how the technical works. And then they say that 70% of trading is psychological, so everything all the skills, it only pertains to 30%. So then all the 70% is your emotional, and then all of that. It's crazy, right? So anyway, I'll stop the rambling there. But I just thought I would help as much as I can. So. Again, you guys enjoy your Wednesday night, and please feel free to come by the midweek update next Wednesday. I'll do it live. If I don't do it live, I will put out the video and I'll let you guys know. But please sign up for that live, and if you can't make it to the live, sign up. You have to sign up for the recordings for the live, and I'll tweet it out too. But if you don't want to miss it, then that would help. So have a great evening, and we'll talk again next week.